James, your reaction to this FT report that CRM has essentially walked away from a potential Twitter bid?
Sure. We're not really surprised at all, really. I mean, you look at the balance sheet of Salesforce, it was a very difficult deal to get done. We've seen that the shareholders were against it. And when you look at the synergistic opportunities, really, were they the company to extract the most value out of Twitter? We don't think so. So really not coming as a surprise to us. But unfortunately, what's happening right now is that the last person at the table has walked away.
What does Jack Dorsey do now?
I think what Jack Dorsey has to do is first, understand and communicate to not only the company but also the public, what their mission is going to be, because they're going off in a lot of different directions. They're trying to be live. He's characterizing the company as a news media outlet at the same time, and what type of price are they willing to pay for the content that they're going to be acquiring? So I think that they need to do some type of gut check on what Twitter needs to be. And more importantly, at the board level, they need to be reasonable about the valuation that they're willing to take. Because with the $20 billion, $30 billion numbers that have been thrown around, even 15 put on out this week, that was kind of the peak valuation.
I'll be more direct here, James. Should Jack Dorsey step down? He's trying to run two companies, man.
Look, it's a difficult call, but it's very difficult to run two companies at the same time.
Well, would the stock trade higher if he stepped down? I mean, we're asking this because he's not only running two companies, but he was brought back to run Twitter to revive it and or to sell it. Has it been revived? I think most analysts would say no. Has it been sold? Apparently not. What's left?
You're exactly right. I mean, look, the company's not moving in the right direction. The advancements that have been made all have been made on the back end. We haven't seen much iterations on the front end at all. Really, the only deals that we're kind of seeing is coming more from Anthony Noto than it is from Jack Dorsey. So, maybe a change in the leadership is something that would be welcomed by the street and the investors.
And I think what you're mentioning is a very important point about Noto, because Dorsey gets all the attention, but I will remind our audience that Anthony Noto, the CFO of Twitter, is a former Goldman Sachs analyst. So he comes from the banking side of the business and potentially could dredge up a buyer. James, I don't want to put you on the spot. I know you called a $15 billion, if I'm remembering it, $15 billion valuation, the last note you put out. Forgive me if that's wrong. Is there a potential foreign buyer, given the stuff we just talked about? Maybe a soft bank, maybe a European company we have not dug into enough?
Yeah, absolutely. I mean, SoftBank is one that, we've tossed around before. Potentially you see, like the Saudi royal family, come in and put in some money in collaboration with other investors. But at the end of the day, does that solve Twitter's problem? We don't think so. It needs to operate within a larger organization where they can tap into the big company's resources, acquire the content that they need, serve as a distribution channel for that content, and reach millions and millions of users around the world without having to rely on reporting these user growth metrics, and they can invest in the way that they can in order to extract the full value of the business. Right now, it's just they need to be within a big company.
Is it too big to be taken private, maybe by management?
I think so. I mean, look, Brian, you called it the $15 billion was the top valuation. We were at $11 billion on the low end. I mean, these are still big numbers because even with all these things happening, you have to remember that this is the most widely available free marketing in the entire world. Everybody knows what Twitter is. You talked about the interest graph and as well as the data. So there is value there, but being taken at 10, 11 billion is not an easy task.
The 52-week low in the stock, James, was 1373. That was a level traded around Brexit when a lot of stocks were hit very hard. Is there a floor, in your view, to the stock now that all of the reported bidders have effectively walked away?
Yes. I mean, the way that we're thinking about it, I mean, we've basically thrown fundamentals aside on this one. You can't look at the revenue metrics, the EBITDA metrics, because of the fact that we honestly don't know what the revenue trajectory is going to look like in the coming quarters, because their new business is cannibalizing their old business, and the cost of each incremental dollar is going up. So this model that the street's modeling may not be accurate. So we're looking at it on a per-user basis, comping that against what LinkedIn was taken out by Microsoft at $60 for the daily active users, discounting that by 50% for the monthly active users.
I don't get that. I don't get that metric, though. Why is one active user for Twitter equivalent to the value of an active user for LinkedIn?
Well, you're giving the benefit of the doubt there because of the
Okay.
fact that you're getting the free marketing
All
and
right.
the Twitter platform.
Okay, James, we're going to leave it there. Thank you so much,
Sure.
James Chalkmock of Monness Crespi Hart.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.